You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Acuna Capital. Known as the new wave in tech and trading, Acuna is a leading derivatives market maker in traditional asset classes. As one of the first trading firms to make markets on Bitcoin futures, Acuna is also proud to be an innovator in the cryptocurrency space. Through a collaborative flow of knowledge between developers, quants, and traders, Acuna designs and implements their own low-latency technologies, trading strategies, and mathematical models. To learn more about our rapidly growing firm, please visit acunacapital.com. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody, that music means it is time once again for the Crypto Rundown, the program where we break down everything that's going on in the explosive world of Bitcoin and other digital asset trading. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. I apologize, we've been moving the time around for Crypto Rundown a bit here lately. It's kind of sometimes like herding cats, all the different moving pieces and parts that go into a show like this. So coming to actually on a Tuesday this week as opposed to our usual Monday time at 4 p.m. Central, 5 p.m. Eastern. So, of course, you can get it if you follow us in Mixler. You'll be notified the second we go live with the program. If you listen on podcasts like most of you do, I know, you'll get it in your device of choice pretty much a little bit later than usual, but not too much later. And of course, however you listen, live after the fact, hit us up, questions, comments, insights, pearls of wisdom. We do enjoy hearing from you guys. It's especially important these days that you head on over to our social media platforms of choice, particularly Twitter and StockTwits and Facebook and all those fun places, because it's Options Broker Madness time. Yes, you guys love it. We brought it back yet again, third annual Options Broker Madness tournament. This is where you guys get to choose the winners of who is your favorite options brokerage firm. Maybe you have a firm you really like, you want to vote for them. Maybe you have a firm you really hate, you want to vote against them. Either way, we won't judge. We just want you guys to vote. The more you vote, the more you share, the more you like, the more you retweet, the more you engage with the Broker Madness, the more chances you guys have to win some fun, fabulous prizes at the end of the tourney when all wraps up, when the championship NCAA game does as well in early April. But round one is going live. It's live, went live this morning. It's out there right now. So the easiest place to find the link for the voting is over there on Twitter, and StockTwits at Options is the place to go. Remember, that's going to go for a while. It's going to be fun. And the more you play, the more chances you have to win. Meanwhile, let's keep on rolling with the program with our inaugural segment. It's time to kick it off with the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show we welcome on guests from throughout the world of crypto trading. Proceed to pick their brains. For the benefit of you, the listener, my next guest is a newcomer to the program and indeed to the network. He is Josh Green, the head of trading at Digital Asset Capital Management. Josh, welcome to the Crypto Rundown program.
No problems. Firstly, thanks for having me. It's great to be here. So Digital Asset Capital Management, we are a digital asset only focused fund Digital Asset Capital Management being the parent company. We manage money for institutional and family offices around the world, focusing on three major funds. Our flagship kind of digital asset fund, which is what it's called, DAF for short, is a high conviction long fund. We have a bias to protocols, some mainly in the top 20 coins, and we also have some smaller cap high conviction positions and some ICO positions. That was founded about a year ago in January. Digital Asset Fund, our ICO fund, so DAF ICO is our second fund. As the name suggests, it's an ICO-only fund. We do take some equity positions in blockchain businesses, but predominantly ICO-focused. We also have a bias to protocols in this fund. And our third fund, which is one we're trading internally since November, incubating and will be opening to outside investors shortly, which probably most relevant for this podcast is DAF Greeks, which is a derivatives fund. We focus on trading cryptocurrency options. As far as we're aware, this is one of the first, if not the first, cryptocurrency fund that only trades options from a buy-side discretionary point of view. There are obviously participants out there market making, proprietary market making and market making with other people's money, but we believe this is the first buy-side offering that we'll be providing. So in the terms of our team, the business was founded in mid-2007 by a guy named Gabriel Abed, who's got a lot of experience in the blockchain space, and then a investment banker named Richard Galvin, who ran investment banking teams at Goldman Sachs and JP Morgan. We have 7 staff across numerous locations, mainly from traditional markets background and blockchain-specific backgrounds. My background is proprietary and buy-side macro trading in Australia, in a hedge fund at a bank, internal hedge fund at a bank, at the institutional level, mainly focused on volatility and G10, Asia, FX and rates, with a little bit of VIX thrown in there for good luck.
And Josh, all of our guests who've come from traditional financial markets, and that's pretty much all of them, they all usually have this moment where I kind of jokingly refer to it as kind of their come to Jesus moment, where they suddenly had just this moment of clarity when it came to, hey, there's something to this crypto space. I want to learn more about it. I want to get invested in it. I want to trade it. What was that moment for you? What really brought you to the quote unquote dark side of crypto, Josh?
It's safe to say I wasn't an early adopter like a lot of people. I was pretty focused on macro, as you would know. It's a full-time job. But in kind of 2017, I guess, when it all was really kicking off, I just started trading it on a personal level, got interested through there. It's obviously, back then especially, was wildly inefficient and, providing a lot of movement and volatility that you often didn't see in the traditional markets. So that perked my interest, and then I just got more and more involved from there, and then thought, it could be interesting, and it's very rare to get in at a ground level in a new asset class. That doesn't happen. It's kind of a once-in-a-lifetime thing. So I thought, may as well jump across to try and make the most of it and try and, get in there early, build up a macro framework for the asset class on the assumption that, at some point it would join its siblings, traditional worlds.
You're right. That doesn't happen too often where you can dive afresh and anew into a new asset class. Looking at the primary fund, the flagship fund, I want to get to the options fund in a second too, because I know that'll be our listeners' ears certainly perked up when you said that. But let's get to the primary fund first, the digital asset fund, the aptly named digital asset fund. I'm curious, is this pretty much 99% Bitcoin, long Bitcoin, or are there smatterings of other assets and coins thrown in there?
There's definitely some other stuff. I guess you'd say the Bitcoin weighting is one way that we can manage risk on, risk off exposures in the fund, because Bitcoin tends to outperform often in what you would call a risk off environment. But we tend to have about 70% in the top 20, and then 30% in basically the rest of the market. And we're not just buying a certain percentage of every one of the top 20. I think right now we hold only 4 coins in the top 20. And then we hold some much smaller coins, ones in the 50 to 200 range, and we also do some ICOs in that fund. So we have some ICOs and a bit of we lend around our core Bitcoin holdings just to generate some extra yield.
Interesting. So you have the ICO fund, but you also will put ICOs in the flagship fund. So how do you determine which goes where?
Yeah, so the ICO fund was kind of was born out of the DAF fund, because DAF fund was January started, but the ICO fund we didn't start till August. So it was born out of people going, well, we believe we can hold our Bitcoin, but we'd like some exposure to the ICOs. So we thought, okay, well, just due to demand, we'll put a vehicle out there that caters specifically to ICOs. So now, the ICOs, just due to weightings anyway, tend to go to the ICO fund. But obviously, the ICO fund gets first look, and if there's leftovers, then we'll put some into DAF as well.
And obviously 2018, a challenging year to run a primarily long, at least digital fund. Walk us through what that was like and some of the challenges of, managing this fund in a predominantly bear market environment.
Yeah, it wasn't the greatest market environment for it. Look, I think it's just trying to keep to assets that you believe in long term, but trade around them into bounces, lighten up, into sell-offs, kind of buy appropriately when you think the time is right. Also, we do hold a fair few staking coins, so trying to generate extra yield to protect the portfolio a little bit via staking and lending. So you can. At one point, it was you were getting around 7% to lend Bitcoin. It's since dropped down to about 4%. But so some of those types of activities as well. And for us, we can go to cash, so we can also hold some cash as part of our, effectively as part of our 30%. So just going in cash where, when we think the time is right, and battening down the hatches, keeping on working.
Yeah, it's certainly important in this environment. Of course, this past couple of weeks, maybe not so much. We'll get to that in a little bit in our Bitcoin breakdown segment. But of course, you mentioned the options oriented fund. I tend to agree with you. No one else has approached us, and I tend to think we would have heard about it by now if someone else was planning a digital options oriented fund. That probably would have come across our desk at some point now. So I'm willing to cede you the ribbon for first place there in the crypto. Walk us through, what is the plan for that? Obviously, our listeners know there are no listed options yet available really in the U.S. Overseas, a little bit of a different story. So walk us through, what was the impetus for offering an options-oriented crypto fund, and what are you planning to trade in this?
Yeah, we think there's just a huge opportunity in that space to generate alpha. And not only just to generate alpha for investors, but also to really be part of the build up of the derivatives part of the market. In a traditional market, the derivative space is multiples of the linear space, and I think it's quite likely that you'll end up with the same market structure in the crypto space. So there are the short version is right now we've been trading it internally just, as a proof of concept, testing liquidity, making sure we build up robust counterparty relationships, risk management tools, et cetera. And then now we've kind of got to the point where we're comfortable with all that stuff, comfortable with how much money you could run in the markets, the liquidity both on exchange and off exchange. It'll be, a case of opening it up to interested institutional parties.
And obviously, our friends here on the show, Acuna, they're pretty active in the OTC Bitcoin option space. Is that going to be the primary area of focus for you guys? Is the OTC Bitcoin for now, or you may be planning some other international type forays? What's going to be the core holding of the Greeks fund when it launches?
So in terms of exchange / counterparty offerings, Acuna is, I'd say, the biggest counterparty. Certainly OTC, they're a great counterparty, and we really like them. They make good prices, and they're very smart traders. There are some other counterparties OTC. There's also, you've got the Ledger X exchange in the US, which we don't participate on. They've got some US-centric things that don't really suit us. But you do have some other exchanges such as Deribit, I'm not sure if you've heard of. They're a Dutch-based exchange. So they'd be the kind of leader in the on exchange, and they trade some reasonable volumes, multiple millions of fiat worth a day. On the big days, can get double-digit millions. They're about to open Ether options as well, but plenty of serials, plenty of strikes, pretty good liquidity. So we have the OTC route, which we generally trade as a fiat. We're a fiat fund, generally traded as a fiat-denominated option, and then we have the route which is Durbit, the exchange route, which is Bitcoin-based. But we have some good relationships with the market makers who are directly market making on that platform. So we tend to get liquidity tends to be fine. But once you start getting into bigger tickets, that's when you go into the OTC markets.
You're right. That's one of the nice things about you guys being headquartered over there in Australia is a lot of the options, pun intended, that you mentioned there are off the table, off limits for a lot of our audience here, and they need a VPN or they're outright banned. From trading a lot of these products. So it's shall we say, a more complicated process to try to trade. We get inundated with questions about this exact topic pretty much every week on this show. So we're hoping here in the U.S. I'm curious for you too. Obviously, you're situated overseas, so the U.S. regulatory front maybe not as front and center for you guys as it is for us. But I'm curious for you guys as you're putting together this first crypto options fund. Are you as surprised as we are that we haven't really seen the launch of a listed options product here in the U.S.? I mean, there was all this furor back in the end of 2017, early 2018, when everyone was racing themselves out the door to list futures. We'll get to the Cboe's idea or their decision in a little bit. But are you as surprised as a lot of our audience, and frankly myself, that we haven't seen anything really on the primary listed front here in the U.S. yet?
I don't know. I mean, I'm not sure if I'm surprised per se. It's very hard. It's very hard to benchmark when these things are gonna pop up. In a bear market with dicey ICOs is probably not the most likely time, I guess. I do think as the market develops and you get more solutions around custody, etc., that's when you'll kind of get the product up and running. So assume they will, but it's just going to be a thing that it requires the volumes to come back in good size and the sentiment to turn around, I guess.
Yeah, there's certainly a lot of that, and not exactly the best sentiment news, at least from the product perspective, coming out of the U.S. over the past week. And another big topic that we like to talk about here on this segment and is top of mind for a lot of our guests here on the Crypto Hot Seat is of course, what's going on the institutional side. A year or so ago, every institution was champing at the bit to get into the crypto space. This year, we're hearing more mixed things. I'm curious, what are you hearing on that front? Do you think that institutions are still interested in this space, and are you seeing that from the interactions you're seeing, or you think maybe the protracted sell-off has dampened some of their enthusiasm?
Yeah, I think it's mixed. I think some institutions are noticeably more bearish on the market than they were. Other institutions you're still positive and aware that this is not the first time that crypto has had a drawdown such as this one. It's happened multiple times in the past. So while not fun, it's also not it's not completely new. So you got those two, and then you've got the institutions who are kind of just pivoting a bit, pivoting to more market neutral strategies or more picks and shovels types of strategies. So the guys and girls who retain interest but maybe have lost a little bit of faith in the get long the coins, but they're still interested in the space. That's certainly some of the feedback we've been getting about the Daft Greeks is a positive response that it is not just trading a directional Bitcoin fund. Obviously Vol is a completely different asset class, so it gives you that kind of market exposure, but in a slightly more market neutral, uncorrelated fashion.
Exactly. That's one of the things that everyone was looking forward to about the launching of some sort of listed crypto options here in the U.S. is that you don't need to be tied to this directional type trading with very margin, very capital intensive, whereas options obviously give you leverage, allow you to trade around that, trade the volatility instead. A lot more nuance allowed for that, and yet we have not seen that, unfortunately. You're talking about institution.
Yeah.
Oh, I'm sorry. Go ahead.
Oh, I was going to say, I think a lot of people have gone down the algorithmic trading route and the arb trading route to get that kind of exposure. But I think, everything, all market strategies go through cycles, both short and long term. And, while you had the long only strategy was in favor, and then the ICO strategy was in favor. And this year it's last year, I guess it was more the algos and arb trading was in favor because, people wanted something a bit more market neutral when the market was going lower. And I think, this year, as more players enter the space and technology, more technology enters the space, the ARBs have already closed up a lot, but they'll continue to close up. That'll be harder sledding. And then people will... So kind of more sophisticated strategies that you would get in a normal market, options, et cetera, as the borrow market kicks into gear, long, short, that kind of stuff.
Well, obviously, we're in an interesting time for all things Bitcoin and crypto. I want to get your thoughts on the current status of the crypto market as well. So let's keep on rolling right on into our next segment and dive on into our Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we break down what the heck's going on in the world of Bitcoin since the last time we all gathered here together last week. And it's been yet another week for the bulls out there with the Bitcoin getting the bull bitten its teeth over the past week, up about close to another 150 handles from where it was last show. Last show it was hovering around the 38 half level, and now it's about 39, 90, 91 or so. So about 140 or so handles from where it was last week. Also a nice lift to some of the altcoins as well. We'll get to those in a little bit with the exception of Litecoin today anyway, but week-wise, it's still been a good week out there. We also have seen with this recent rally, vol kind of coming in a little bit. We saw coming into last week, we saw the vol pretty much the lowest it's been since about mid-November, right around the 14th, 15th of November in that time frame. That's 30-day realized now. So the 30-day realized vol in Bitcoin was kind of coming off a little bit. It had a little bit of a resurgence coming into January again. Then it's kind of been effectively trending downward for most of this year. But Josh, you're out there running a digital fund. You have a lot of core holdings in Bitcoin. I'm curious, what are your thoughts on this rally we've seen over the past couple of weeks? We've seen it rally from the low 3,000s, around 3,300, all the way up to about 4,000 right now. Is this, think this is a sign of maybe a bit of a shift out there, or maybe a little bit of a nearer term, something like a short squeeze? What do you think's going on out there right now?
Yeah, I think it certainly was a couple of weeks ago. In the end of middle of Feb, I guess. I think the market was quite bullish, and we had that big red day. What day was that? It would have been late, kind of the 20th or so, 24th, I think it was, where Bitcoin had a big sell-off. And since then, while the market is a lot higher, I think if you're sitting there trading every day, it probably doesn't feel as high as it should. It's been the kind of way it's traded is consolidation, a bit grindy and quite thin, spiking either way, and then suddenly, a big short candle up or down. So I think the market's definitely has been more bullish. Me personally, I've noticed a bit of a change in sentiment just over the last few days, where a lot of people are starting to say, okay, maybe we've seen the end of the run. Kind of petering out. Maybe we'll go back to 3,500. So we'll see. I'm not sure that the market is super long here. Although some of the positioning data, especially in ETH, would suggest otherwise.
And I'm curious, what do you attribute this recent rally of the last couple of weeks to? Is it just a technical rally where we're rebounding off some lows? Is it maybe, it sounds like you're not buying into the longer term shift in sentiment. Is it maybe some people were talking about maybe a potential short squeeze towards the end there? What do you think is driving this near term rally we're seeing?
Yeah, I mean, in terms of I'm definitely, I'm in the more bullish camp. I think we can probably go a little bit higher. I think until we get past the kind of low 4,000s, mid 4,000s in Bitcoin, I'm still a little bit hesitant. But I do think short term the risk is still to the top side. But I would not be surprised to see a quick 300 handle move lower either. In terms of the rally, I think it's just a bit of a shift in sentiment. It's kind of bounced. I think the market was very bearish at the lows. A lot of people thinking we'd get a final capitulation, and that big candle, I think people were very offside for it, and basically that kind of flipped the switch, and people just haven't given up on that view yet, which is fair enough.
Now, speaking of technicals in crypto, I've heard interesting things about the application of technicals in the crypto space. I know early days people were telling me the technicals actually worked even better in some crypto products than they do in your traditional cash equities or options or things like that. I'm hearing different things, maybe some conflicting things on that. Now, what's your viewpoint on that? You think technicals are they more effective, less effective? Is it just a different beast when you're using them in the crypto? What are your views on that? Or maybe you guys don't use them at all?
Yeah, I mean, my view is that they're more effective in crypto, mainly just because it's much more of a retail-dominated market. And as it becomes more of a traditional market, and you get, more of a robust macro framework around it, with kind of correlations between markets, different flows, a more sophisticated market, different products, curves, etc. People will start to be able to apply more of the stuff you get in a traditional market to the crypto market, and technicals will decrease in their importance. But yeah, it still seems to me uncanny how technically it trades and how often it stops kind of just where you would think it would if you were trading a chart. So I think for the foreseeable future that is still the case. Having said that, it does, the market structure right now, it's quite thin. I think it's really driven not so much by physical flows. It's predominantly right now, it's driven by places like BitMEX, which you get those big spikes up and down from liquidations. So it's very technically driven, but that also kind of heightens the risk of getting those big spikes or bigger falls through key levels.
Exactly. And looking at some other products out there that are trading it up right now, are the futures over there on CME, the kind of the last of the Mohicans now after this big race out the gate. Cboe and CME racing each other out of the gate. CME left standing when the dust clears. The future right now, the March future, just pretty much at exactly 4,000 coming into showtime, up about 40 handles today. Not a huge amount of volume on the tape today. It looks like about 2,500 or so contracts on the tape. Remember, that's a 5x coin, so a 5x multiplier out there. First off, Josh, do you guys utilize the futures out there, the CME futures in your fund? And then secondly, are you surprised that Cboe is calling it quits so soon?
I mean, they weren't doing much volume, I guess. So I think it's just a case that CME won the battle, and Cboe if they do, they'll come back with something a bit more similar to what CME are providing, and then the battle can resume. I think a big reason for that was the CME settlement being based off the Gemini auction, which is perhaps not the most robust source of a settlement price, whether the Cboe is more of a reference rate. In terms of our activities, look, we don't really use the futures very much. We tend to trade a lot of physical. We trade on the various derivatives exchanges that are out there. We also have some quite good settlement and trading arrangements with some of our institutional counterparties. So we don't really need them so much right now, but it's available if we need to use them. Available if we need to.
Yeah, use them. I think for a lot of institutional players, margin-wise, the futures aren't super attractive from.
That's basically right. Especially when running a derivatives fund, you get the leverage on the face of the options, obviously. So the amount of Bitcoin you get, or Ether, or whatever the coin is that you're trading, can actually end up being quite substantial. So it's just very capital efficient from a delta hedging, gamma trading point of view, if you can, have good margining, good settlement, good leverage.
Yeah, I mean, I wish I could say this is a surprise, but it's not exactly like you said. They haven't exactly been lighting up the tape since they launched. They said they failed to generate pretty much even $1 billion in total notional trading volume since the better part of the last 8 months or so out there. Meanwhile, CME futures have been setting new records, 18,300 contracts not too long ago, which was a new record for them. Volume's also up 25% year over year from compared to where it was. Cboe, that's not exactly the case, which is interesting. I think your point about the settlement is a good one as well, and the process with Gemini, because it seemed like in the end of 2017, when all these futures were racing out of the gate and everyone was racing to launch the crypto products, it seemed like the quote-unquote smart money was putting their money on the Cboe contract. Simply, it seemed like everyone was fascinated by the multiplier. The smaller multiplier was one coin contract. It seemed like that offered a lot more nuance for a wider variety of audiences out there, including retail, whereas the CME contract, when they launched it, it was 5 coins. At the time, Bitcoin was threatening 20,000, so it was effectively $100,000 contract. It was a big, beefy contract, and it seemed like that might be off-putting to a large amount of retail. Almost instantly, as soon as they launched it, there was talk about, and people were asking them about, is it going to be a mini? Is it going to be a smaller size? And yet, fast forward a year and a few months, and the big, beefy, meaty contract is the winner. Do you think it was just the settlement, like you mentioned at the end of the day, Josh, or maybe were there some other factors at work as well?
Look, I think the settlement had a big impact, and to be honest, I think there's probably just a certain amount of random variance in who wins these things as well. I don't have a high conviction view on why exactly the Cboe won failed. Aside from the settlement, and then I guess just the marginal, what do you call it? A rolling stone gathers no moss. As one starts to do well and grow and get ahead, it just spirals, I guess.
That certainly is the case over here. Fascinating stuff for us to watch here. Of course, based in Chicago, watching these two Chicago entities keep fighting it out. Well, at least one of them for now. It's a one-horse race right now. Hopefully, we'll get some new entrants and some new products, and particularly options. That would be nice on these existing products fairly soon. Meanwhile, let's keep on rolling really quickly to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, where we talk about everything else outside of Bitcoin, with the exception of this one time when we talk about the market cap and what's going on out there. And number one with market cap, the top coins market cap, still, of course, Bitcoin getting up there a little bit again with this recent rally, up over 70 billion now. Number one by a country mile. Number two, ETH, a distant number two, about 14.5 billion out there. Number three, good old Ripple with about 12.5 billion. Number four, EOS with about, looks like a little bit shy of 4 billion, about 3.8 billion. Number five, Litecoin, about 3.5 billion. Then it kind of falls off from there with the second half, the bottom half of the top 10, a distant bottom half from the top 10 out there. So we're talking altcoin. Josh, you mentioned ETH at the top of the show there. Is that one of your primary altcoin holdings, or are you playing in some other products right now?
Right now, we actually don't hold any ETH, believe it or not. So, but obviously, it is still a bellwether alt, and it does drive the market, especially the altcoin market. I think, this rally, it has been altcoin led. Bitcoin dominance has been falling. I think it's really been BNB, Litecoin, coins like that have led it more so than ETH. Especially, like the Litecoin. Once the Litecoin got the news about the Mimblewimble and some other stuff, it really came out of their gates. And we've done some work around the halvings. So the Litecoin halving is basically middle of this year, kind of middle to August this year. So that does tend to lead the Bitcoin halving, and thus the Litecoin kind of leads Bitcoin up out of the bear markets historically. So I think that's one of the key coins to watch in terms of altcoin leadership. And I think right now it's fairly poised as to whether we kind of crack back down to the mid-50s, low 50s, or we have one more spike up to the kind of low 60s, which would, I think, probably coincide with putting Bitcoin around that 4250, 4500, and ETH around that kind of 150, 160 area, depending on how we trade when and if we get up there.
You know, you're right. Litecoin has kind of been leading the charge to the upside. It's up another 4.5 handles over the past week since our last show, threatening that 59 level, like 58.80 or so right there. So you're right. Litecoin has been an interesting one to watch, certainly with some of the most life out there in the altcoin universe of late. Interesting you mentioned the halving, too. That's something we've been talking about a lot here on the show. Usually in regard to Bitcoin, that's the case a lot of the Bitcoin bulls were making when things were getting a little bit dire and we were trading around the 3,300 level. People were saying, wait, there's a halving coming up that could turn things around. Sounds like you see a Litecoin in a similar regard. So are you a big believer in these halving and their impact as some sort of maybe bullish inflection point for the products?
I mean, I think historically they have been, and there is a logical argument as to why they should have an impact. Just natural, less sellers, you need less buyers for equilibrium, and you need less buyers to make it go higher, right? So I think it makes sense that there is an impact there, and how markets are with sentiment and views. I think if enough people think it is, there'll be some sort of a self-fulfilling prophecy to it. But yeah, we think it matters.
You don't really have similar things. I mean, you have stock splits and things like that. So I suppose that's somewhat analogous in the equity markets. But very rarely you have these events where the entire structure of the underlying market has changed. And so you're right.
I mean, I guess you could draw a long bow and liken it to holding a negative carry versus a positive carry, interest rate swap or something like that, where it's just easier to hold the asset if it's positive carry than if it's negative carry. But,
Yeah, and also some other assets lighting it up out there. You mentioned ETH. XRP still kind of flirting around that 31 cent level. Hasn't really moved a ton since our last show out there as well. But ETH, like I mentioned, up nearly 6 handles since our last show, up to about 137.75 or so, up about 5 3/4 or so from this time last week. That's another bit. I mean, a lot of people have been focusing on the bullish story out in Bitcoin, and rightfully so. It is the lion's share of the market. But seeing the story out there, it's still similar in some degree, certainly from a percentage-wise perspective, even more impressive story out in some of the altcoin, particularly Litecoin and even ETH of late. Speaking of what's going on out here, let's see what's on your mind as we wrap it up with a little bit of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions. We got a lot of fun ones here. You guys keep hitting us up. You know where to find us on all the major social media platforms, pretty much at Options or theoptionsinsider.com, or via the live chat if you're listening live, or pretty much via email, all the other fun stuff, questions at theoptionsinsider.com. It all works. It all comes to the same bucket at the end of the day. Let's kick things off. I think we got a theme to some of the questions this week, Josh. First off, we got a question from Ben Todd. He wants to know, are there any legal ways to trade Bitcoin options here in the U.S.? I guess it kind of first depends what you mean by legal. I think the definition of legality in this space is a little bit gray. We have a lot of services that aren't offered here for a variety of reasons. Some of the products aren't approved. Others just have their terms of service prohibiting you from going through them. So it's not technically illegal to go trade on some of these exchanges, but you need a VPN, and if they discover you, they could shut you down and terminate your account. So that's why we've always cautioned against using some of these venues to trade quote-unquote options around here, because for the lion's share of the U.S. audience, they are not available. You mentioned LedgerX earlier, Josh. That's one we haven't had them on the show yet. I want to bring them on because they claim to be U.S. regulated spot and options, and they also have their own Bitcoin VIX, which is kind of interesting. So that is a potential one. Bon, do you have any thoughts? You're not a U.S. resident, so I won't hold your feet to the fire for your thoughts, your views on U.S. law. But in general, is LedgerX, is that your recommendation?
Yeah, I mean, without professing an expertise as to what U.S. people should be doing, to my understanding, LedgerX is the only U.S. regulated exchange out there right now. There are, Deribit is obviously probably the market leader in terms of exchanges for crypto options. There are a couple more in the pipeline as well that are being built, and then you've got the OTC route. But yeah, as the US, unless you can pass onboarding requirements with firms such as Acuna, I think that's probably where you're limited to. But I do think it should. I think I'm very, very confident that it'll grow, and there's a lot of there'll be more solutions in the pipeline over time.
Yeah, and of course, obviously, it depends what size you're talking about, too. That's a different story. If you want to do some OTC size, the Acuna guys can handle you, and you're doing larger size there. I'm assuming you mean for more of the retail-focused size there, Ben, in which case, again, I do want to get the Ledger guys on here to pick their brains about exactly what they're offering, exactly what you guys can do here as a U.S. resident, and also their views on their volatility index, which I think it's, to be fair, they're not exactly being shy about. They're aping it after a Bitcoin VIX. So talk about them about that as well. Underkill's got a question. Talking about VIX and all things Cboe. He says, is the Cboe killing Bitcoin futures? Is that the death knell for options as well? Well, certainly at the Cboe it would be. They're not going to be listing options on a product that they no longer list. So that's not going to happen there. But no, I don't think this is the case. I think Josh hit the nail on the head with the settlement in Gemini. There simply wasn't a lot of support for it out there. And clearly, even though the CME contract was a bigger, beefier, meatier contract, them having a lot of established presence in the future space certainly helped. And then B, that people obviously had a lot more faith in that system and that settlement. And it's been reflected in the volume number. So no, I think they're going to be listing options on those. In fact, I was talking to those guys about that down at the FIA conference in Florida last week. So hopefully sometime in the near future, we'll be seeing something listed on that. But I don't think that's killed it at all. Again, Josh, I won't hold your feet to the fire on all these U.S.-centric questions, but I'm assuming you're in the same camp. Just because Cboe didn't make a go of it doesn't mean options are dead here in the U.S.
No, not at all. I don't think it really has much bearing on the future for options at all, to be honest with you. I mean, crypto of all markets is a global market. There's plenty of growth in the space. There are solutions. So, I mean, from an OTC perspective, at least, one of the things that we look for. So all our funds are BVI or Caymans and audited, et cetera, et cetera. So one of the things we look for is, what do you call it? Just a market structure around settlement, novations, cross-margining, there's no clearing houses, all that kind of stuff. But those solutions, there are people out there developing them now. So, hopefully in the next year or so, there'll be novations, there'll be, netting, there'll be clearing houses. And as that stuff is developed, we think it'll kind of go from strength to strength.
And there's one right up your alley, Josh, here to wrap it up. This comes from Charles Q. He wants to know, has the ICO market quieted down along with the core crypto markets, or is it still the Wild West out there? Well, I think he's referring to the latter part of that question, referring to all the data we saw coming out of last year in 2017, of course, where a substantial amount of the ICO market, at least here in the U.S., was fraudulent, shall we say. So it was very Wild Westy. I'm curious, Josh, this is your area. You run an ICO-oriented fund. What do you have to say for our listener here? First off, has the ICO market, has it kind of tracked the broad crypto valuation levels? Has it somewhat quieted down now that we've seen the crypto valuation levels lower? And then B, what are your thoughts on just the Wild West nature of the ICO market and maybe coming to grips with that?
Yeah, I mean, firstly, the ICO market has definitely quieted down. I mean, there's still a lot of deals flying around, a lot of bad deals, but certainly nothing compared to what it was. So it's a lot quieter, and a lot of the companies that are now coming to market are doing slightly different structures, whether it be convertible notes, various SPVs, things of that nature. So there are some slightly different, slightly more sophisticated structures coming out there. In terms of the Wild West, there's still plenty of Wild West activities out there. If you are inclined that way, we obviously it's not where we get involved. I would say similar to the market, it's less similar to the ICO market generally. Like, it's less, but it's still an early stage market where regulations are uncertain. So there's always going to be individuals out there looking to take advantage of that. In terms of the market, it's been pretty bad price-wise over the last 12 months. A lot of ICOs have held off listing their tokens because of that fact. They don't want to list into a bad market. They're hoping they can just hold on until the market recovers, and then they can list and hopefully get a better outcome. That has led to more of an OTC market around these tokens, where people basically trade SAFs or trade their allocations between other people. I guess that would be that. We've never actually participated in that market, but that would definitely be the Wild West for sure, because it's not much. There's not much price discovery there. Put it that way.
Well, there you go, Charles. Hope that answers your question. That's one thing we've learned, Josh, from doing the show for a few months now, is that there's never a shortage of Wild West in the crypto space, right? You can always find it if you're looking for it. Well, Josh, I appreciate you coming on the show today. Give us a little bit of a glimpse into what you guys have going on over there at Digital Asset Capital Management. If our listeners are intrigued, maybe they want to learn more, maybe they want to check out some of your funds, maybe particularly your forthcoming Greeks fund, where should they go? What should they do, Josh?
Yeah, I mean, you can reach us on our website, which is www.dacm.io. Dacm spelled DACM. Otherwise, I've got a Twitter account, which is at Joshua Green, DACM all in capitals.
There you go. Reach out to them with your questions. Check it out. Again, it is certainly the first of its kind, particularly when it comes to the option space. So check it out. That's DACM, Digital Asset Capital Management.io, if you want to learn more. And on behalf of Josh and myself, I want to thank all of you out there for downloading, streaming, subscribing, listening live, sending in such great questions. Keep them coming, and we'll see you back here next week for more of the Crypto Rundown.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.